Okay guys, so in this video we're going to be covering what we're going to be covering we're going to be covering the investing activities, right? So in this video we're doing the investing activities, right? So we're not talking about investing activities, we're talking about us investing in our assets or investing in what fixed deposits, right? Now what do we have here as one of the items? We're having proceeds from sale of your assets, right? And then we're having what? We're having additions, right? Or you can say your purchases, right? Let's put proper English here. Purchases of assets, right? And then we're having what? Change in fixed deposits. Now guys, the signs that you're gonna put here, the signs that you're gonna put here, you have to interpret them in a way of like, you have to focus on your inflows or outflows of money, right? You focus on your what? Your inflows or your outflows of what? Money, right? For example, proceeds from sale of asset, it means that we as the company, we sold our what? We sold our asset, right? When I'm selling my asset, it means I'm going to receive cash, right? So when I'm receiving cash, it's gonna be a what? An inflow, right? Always guys, it's gonna be an inflow, proceeds from sale of asset. When I'm talking about additions now, or purchase of an asset, it means, remember guys, when I'm referring to the term asset, I'm referring to what? I'm referring to my equipment, I'm referring to my vehicles, I'm referring to what? Land and buildings, right? So if we sold an equipment, if we sold vehicles, those the money that we received from us selling this asset, meaning the disposals of these two assets, we're gonna put them here. If we sold an equipment and vehicle at the same time, we're going to add the disposal at carrying value and put them here as part of our inflows, right? For same applies. If we purchased an equipment, we purchased a vehicle, we purchased land and building, those three amounts we're gonna put them here as part of our outflow. Because why? When I'm purchasing something, I'm taking out my money in order to get that the benefit out of that thing, right? Now let's talk about the change in fixed deposit. The change in fixed deposit, you have to interpret it, right? So in this case, 2021 and then 2022. 2021, I had 20,000 in my account, and then now it increased to 50k. What happened? I invested more, meaning as a company I invested more. Okay, so therefore the difference between the two is what? 30,000. So therefore me investing more, it means I took out my money and invested. So therefore that's an outflow of money. It's an outflow of money. So an increase in fixed deposit is a what? An outflow of money. Now a decrease um a decrease in fixed deposit means that my fixed deposit matured and I did what? I received money out of the fixed deposit. So therefore that's a what? That's an inflow of 30,000. It can never get complicated than that, guys. It can never get complicated than that. Now let's move to calculations now, like how to calculate your additions or your proceeds from sale of asset, right? Meaning the simplest one or the most common tested question or approach can be this one, right guys? Let's say you're having your carrying value at the beginning of the year plus your additions minus your disposal at carrying value minus depreciation for the year gives us what? It gives us carrying value at the end of the year. right? Meaning, if you are looking for additions of equipment, we're going to take all the information of equipment and put it here, substitute it here, right? Meaning, it's a situation whereby you'll be given the carrying amount. Maybe let's say you'll calculate it. How do you calculate the carrying value? Carrying value is what? Cost minus accumulated depreciation. So the cost has to be at the beginning of the year, and accumulated depreciation has to be at the beginning of the year in order for you to get what? The carrying value at the beginning of the year. Now additions, they'll tell you you purchased an equipment, or if they didn't tell you, you're gonna just put, let's say here is 20. When are you gonna put what? X here, because you don't have your additions. And they say you disposed your vehicle, right? What is disposal? Disposal is the same as carrying value, but for a particular asset that is sold. Let's say the cost of the asset that is sold is 20, right? 20 rands, right? And then the accumulated depreciation of a vehicle on the date of sale was 5 rand. Right? And then what is the difference? The difference is 15 rands here. So this 15 here is the what? Is the disposal at carrying value. Always, guys, the cost price of your vehicle or your equipment subtracting the accumulated depreciation at the point of sale or the date of disposal is gonna give you what? Your disposal at carrying value, guys. If you are interested in knowing or wanting to know how to get your depreciations or your asset registers, comment down below and tell me to make a video of like depreciation in general, because here we're not really focused on depreciation. We're focused on getting our additions, like we're focused on the flow of money in a company, right? So I don't think they'll try to make it more complicated for you to get these things, right? So yeah, if you want to know more of depreciation, your accumulated depreciation, how we go about when you're doing your asset register, comment down below. I'll make sure I drop a video doing your depreciation and your asset register. Right now, for instance, here we're having our, let's say here is our 15 rand of what disposal carrying value. Then we're having our depreciation for the year, maybe let's say is 10, right? And then our carrying value at the end of the year maybe is 25, right? Or let me say 50. Right now, how are you gonna get your additions? Your additions is gonna be like this. You're gonna say 50, which is this amount. You see this was subtracted, right? These two amounts are subtracted. You're gonna say, you're gonna add them now, which is gonna be 10 plus 15 minus 20. It has to give you what? Your additions. So I'm gonna say 50 plus 10 plus 15 minus 20. It gives me what? 55 as what? As my addition. So I'm gonna put these additions right here, and then disposal at carrying value, I put it here. Changing fixed deposit, you know how you get it, right? You focus on the increase or the decrease, you should interpret it, right? Now let me do a question paper now. Let me erase here and do a question paper. Okay, so here I'm doing my change, no, investing activities. Investing activities, right? Now we're gonna say what? Proceeds on sale, right? And then purchases and your what? Change in fixed deposit. Now we move, right? So in this case we're gonna come here. Okay, so let's see. So here they're saying the information relates to SASA Ltd, right? Meaning the financial year ends on 28 or 29 February each year, right? So they're saying that prepare the cash effects of investing activities section, right? Show all workings in brackets, right? So they're saying that information relates to the financial record. So here we have our 2021 and 2020, right? 2021 and 2020, right? So this is at the beginning and this is at the end, right? Now here they are saying Let's just read this additional information, right? And wait, let's go to required. So required says we must prepare what cash effects of investing activities, right? Which is proceeds on sale of asset, uh, purchases of asset, and change in deposits, right? So here, if you can see, we have our what? We have our fixed deposit, right? This is at the beginning, which was 120. Now at the end is what? 250. So therefore there's an increase in what? Fixed deposit. So therefore we invested more money. So therefore that's a what? That's a cash outflow of money. So 120 minus 250. So I'm gonna say my 250,000 minus 120,000, right? So I'm getting my 130,000. So therefore, which sign are we putting? Therefore, that's an outflow of money. So I'm gonna put what? Negative 130 here, thousand, right? Because there was a what? There was an outflow of money. We invested more. We took out our money, right? Now let me come here. We have our depreciation. You must pay attention, guys. We have our depreciation here, and then we are having our what else? We're having our fixed asset, right? But we don't have carrying value at the end of the year, right? Which but we have the carrying value at the beginning of the year, right? Now let's go to what additional information. They're saying that an old delivery vehicle was sold for 184,000, right? And then two additional vehicles were purchased, right? And they were on other changes to fixed asset, right? So in this case, guys, if you can see, um, we sold a vehicle for what? For 184,000, right? And then we had our total non-current assets as to what? 3,370,000. And then we have a fixed deposit of what? Of 250,000. So therefore this and this minus this can give us our fixed deposit here, right, guys? Now let me come here and write the formula down. So in order to get these two, always, guys, don't forget, think of this formula. You're going to say my carrying value at boy, which is what? The beginning of the year, plus my purchases minus my depreciation for the year minus my disposal at carrying value. It gives me what? Carrying value at end of the year, right? So guys, if you can see here, we're having our what? Our fixed asset carrying value, right? So carrying value at the beginning of the year is what? 3,050,000, right? So I'm gonna come here and say 3,050,000, 3,050,000. That's my carrying value at the beginning of the year, right? Let me see. I'm looking for purchases, right? If you guys can see, do we have any purchases here? They did not give us a specific amount of purchases, but they said there were two vehicles purchased. So therefore, since we don't have those purchases, it means I'm gonna come here and put what? X, because that's what I'm gonna solve for. Do I have my depreciation for the year? Yes, I have, which is how much? 371,000. So I'm having my 371,000, right? Which is gonna be negative, right? Now, do I have my carrying value at the end of the year? Let's look, guys. We have total non-current assets. We have fixed deposit. So therefore, this plus this gives me this. So therefore, this minus this will give me what? Will give me my fixed asset at the end of the year, meaning carrying value. So I'm gonna say 3,370 minus 250,000. So I'm getting 3,120,000, 3,120,000, right? Now, do I have my disposal at carrying value? Yes, I have my disposal at carrying value, because they're saying that at an old delivery vehicle was sold for 184,000. At what? the carrying value. So therefore this is my carrying value, so 184,000. So I'm having my negative 184,000 negative. Now how am I gonna get my purchase? Another thing, guys, so this disposal carrying value, I'll put it as what proceeds, because that's the money that I got after selling the asset. So therefore, which is 184,000. Right now, what about my purchases? So I'm gonna say carrying value at the end of the year, which is 3,120,000 plus 184,000 plus 371 minus 3,050,000. So therefore I'm getting my what? My additions. 3,120,000 plus 184,000 plus 371,000 minus 3,050,000. So therefore 625,000 is equal to my what? Additions. 625,000. So therefore we purchased these the two vehicles that we purchased costed us what? 625,000. So therefore it's gonna be negative because we took out my 625,000. We took out my right. Now our total, what you have to get your what? Total investing activities. So you're gonna say your negative 130 minus 625 plus 184,000. So therefore I'm getting what? Negative 571,000. So therefore that's an outflow, right? So yeah, guys, if you have any question, please comment down below, and guys, please don't forget to subscribe to my YouTube channel. Don't forget to hit that like button. Thank you, guys.